out, we were working with a PAT of 242 crore rupees versus a loss. What? Loss at 4,880 versus the ETNA estimates of 242 crore rupees worth of PAT. I'm just going to wait by to refresh and really see whether those numbers look a little believable or not. But it seems like, like one of those quarters which ICICI Bank reported. So having said that, while the loss definitely has reduced from what they posted in the previous quarter, that's a quantum of 7,700 crore rupees, it seems like one of those quarters like an ICICI Bank wherein in just one go they have cleaned up their books. So still a loss is what you're seeing from SBI, and this is way different, way off the mark than what the market was penciling in, because we were actually expecting them to turn into the black, jump into the green. A profit figure of 242 crore rupees is what we were working with. I'm going to quickly request Poonam to mic up because these numbers do deserve attention. A profit figure of 242 crore rupees is what we were working with. I'm going to quickly request Poonam to mic up because these numbers do deserve attention and what really explains this. Having said that, the NPA quality has actually improved at 10.6% for the gross NPAs. It seems like there's a marked improvement there.
Yeah, but I think that loss will not go down well, primarily because Canara Bank and Bank of Baroda have reported better quarters. On a relative basis, this is really about comparison across the industry. SBI being the behemoth, if they have come out with a loss of 4,880 crores versus a profit expectation of 242 crores, one can understand why the stock has plummeted 3.5%. And I think as the market digests more details, there would be perhaps a greater impact. Gross NPAs and net NPAs have come in flat, so there's some respite to take from there. But Poonam, just put the loss in context. I don't think the market was expecting it, so how damaging would it be, or how much of a shocker is it for the market?
Should not be an extremely high shocker, Tanveer, for the market, because the market would be looking at it slightly from a balanced perspective. I would say that yes, definitely we were expecting a profit in terms of State Bank of India, but the amount of loss that the bank has reported is 4,875 crore. This is certainly higher than most estimates. When I was actually making the estimates, only a couple of analysts were expecting a loss, and this loss is definitely huge. And given the fact that the stock had already run up close to 25 to 26% in the last 3 to 4 weeks, I guess we should see some amount of downtick in terms of the stock price, Tanveer. Again, in terms of the numbers, I'm just going through the numbers. 2.12 lakh crore is the GNPA this time versus the 2.23 lakh crore. So certainly some amount of respite coming in terms of the GNPA numbers. We're also seeing that the net NPAs in fact has declined to 5.29 versus the 5.73 in the previous quarter. So that does mean that yes, some amount of improvement in terms of the provision cover as well for State Bank of India. The
One second, Poonam, I just want you to explain where the loss is coming from, because as I look at the numbers, and you have a better handle on this, Lalitabh Srivastava is also joining in. So Poonam, I want you to give me a quick response over here. Where is the loss coming from? Absolute and gross NPAs are fine. There's been no slippage there. On the provisioning side, they provisioned less this quarter than they provisioned the same in the quarter gone by. Provisioning is coming in 19,000 versus 28,000. What explains the loss figure then?
Lower operating profit than expectations and also higher provisions is leading to loss, Tanveer. In fact, if you look at the loss, the main important reason is the higher provisions. It's because that is leading to the loss this time. If you look at the NPA provisions, although it is lower, this is only the NPA provisions is 19,000 odd crore versus 28,000 odd crore in the last quarter. So yes, certainly it is lower quarter on quarter.
Yeah, you know what, Poonam, let's take it across to our experts as well. We've got 3 of them waiting by to analyze SBI's numbers. And Lalitabh, what explains this loss, especially when the street was actually hoping the numbers to turn into the green? We were expecting a profit figure. Why still then a loss, even when the asset quality and provisioning has actually reduced from the previous quarter? Lalitabh?
Yeah, so clearly the pace of... Hello? Yeah, am I audible?
Yes.
Hello? Am I audible? Hello? I can't hear.
Lalitabh, go ahead please. I can hear you very clearly.
Okay. So clearly, on the operational front, there has been some softness. Other income portion, if I see on a QOQ basis, has also come below expectations. And provisioning part, we were expecting the provisioning number to be much lesser than this. So I think these are the two aspects that come to my mind as of now.
Lalitabh, I'm sorry to interrupt you, but I think I have more clarity on the numbers which I need to share with all of you so that you can add more perspective to that. So they've recognized the entire of the MTM losses of 5,890 crores. That explains the loss per se for SBI this quarter around, and I would want your as well as Siddharth Purohit's perspective on this. On the gross NPA front, net NPA front, Poonam was right. It's stable, and that explains why the stock has also recovered. I mean, remember it nosedive about 4%. It's recovered ground and gone completely flat, primarily because, like you said, Lalitabh, this is operationally is not looking too off the mark in terms of the earnings. So net interest income is also up 24%, which is coming higher on a year-on-year basis and versus poll expectations. Provisioning has actually gone down on a quarter-on-quarter basis. We had higher provisioning in the quarter gone by than this time. So that differential, which explains the loss, is really MTM losses coming in closer to 6,000 crores. Now, did they do a wise thing by recognizing the entire MTM loss in this quarter? Would you give SBI the benefit of starting off on a clean slate come Q2 onwards? And would you view the stock in that light? Lalitabh, you go first.
Yeah, so clearly, provision number is and recognition of MTM losses would not be something that would worry too much me. My sense is that the improvement in asset quality is something that is more important. SBI had given a very confident outlook even last quarter also, wherein its watch list accounts were merely less than 1.5% of the total loans, and that was including both SMA1, SMA2 as well. So clearly we were expecting asset quality performance to be the key this quarter, and I think in my view, the bank has not disappointed on that.
Siddharth, this exactly seems to be the same pattern with ICICI Bank as well, wherein the street was only relieved, and I guess the stock price movements ever since ICICI Bank's numbers are a telltale sign of that. They want to clean up their books in one go. Like we were just highlighting, the MTM losses have been incurred. All has happened in this quarterly numbers as well. We start off on a fresh page. Your analysis of SBI's numbers?
First of all, there is a reduction in NPA in absolute term as well as in terms of percentage, both in GNPA and net NPA also. Now, when you talk about the absolute provision, that is really dragging the profit, but there is also improvement in the overall reported PCR. It has gone up from roughly 65% to 69%. So that explains the additional provision also, in addition to the MTM losses, as you said. Now, another part is, in terms of interest income, particularly NII, it has been better than expected. So P&L has been fairly okay. Asset quality more or less kind of, started, it seems that, it has started a trend of, improving. It's too early to say that, obviously that, all the problem has been accounted or not, but going by the watch list that they had given in the last quarter, roughly 25,000 crore or 1.3% of the total asset, it seems that, possibly not much of trouble is there.
Right.
So fairly decent set of numbers, I would say, as of now.
Yeah, I think, and I would give the benefit of doubt to the stock price reaction. If the stock has come off after a knee-jerk crackdown, it's telling you something that the market doesn't see these numbers as bad. It may optically seem like a loss on a quarter-on-quarter basis, but if asset quality has improved just a little bit, and I think whatever they've accounted for on MTM, we are getting a note from the CFO right now saying that we haven't amortized MTM. So I think we are awaiting clarity on that front. But Mayuresh, all in all, what seemed like prima facie a loss in the quarter compared to a profit expectation, if you look at above the profit level, whether it's in terms of asset quality and operations of the business. Even I would go to the extent of saying the net interest income, which is bread and butter on the credit growth side, things have looked good. It's a decent quarter for SBI.
So afternoon, Tanveer. I think as Siddharth was alluding to, I think the NII growth has been quite good. And what you're probably seeing in terms of the higher provisioning done on their balance sheet with the PCR ratio moving northwards of 69%. I think the excess provisioning is what has probably emanated into the loss that they have reported. Also, I think the loss provisionings that they have probably accounted for a tad bit higher than what we had actually anticipated. And to couple that up with the kind of performance that they have meted out, specifically in terms of asset quality, on a quarter-on-quarter basis, that is looking far more stable at this point of time. So I think to summarize the numbers, I think the NII growth is better than what I had anticipated. What you're probably talking in terms of NIMs, you're finding stability happening there. Asset quality is extremely stable, both in percentage and absolute terms, both on GNPAs and the net NPA side. I think the excess provisioning that they have done in a process probably to clean up the balance sheet significantly and shoring up the PCR, I'm not too overly perturbed by that move that SBI has done. The only exceptional number can probably come through in terms of what the management commentary states in terms of how they're probably looking at the loan loss provisions going ahead and the slippage number going ahead in terms of recognition that they've done both in Q4 because of the RBI circular mandatory requirements and Q1 in which they have actually reported higher numbers than what State had anticipated. So I think it's a good move in my opinion that the bank has probably done in terms of cleansing its balance sheet. And even from a valuation perspective, it looks very, very attractive at the current level.
Slippages, by the way, and I think we're the only TV channel to get the slippages right, at 9,985 crore rupees. We have a message right from the CFO saying they have not amortized mark-to-market losses in the Q1 numbers. Lalitabh, at 320 thereabouts, is the stock still a buy for you?
We have a buy rating on State Bank of India. Considering its size, the value of the franchise, along with the value that subsidiaries bring in, and the current valuations do not look very expensive. My sense is we'll continue to have a positive view on the stock, even though we'll have a fresh view after management interactions.
Siddharth, that's Lalitabh and Mayuresh's verdict on the earnings in the stock. Your quick perspective at 324, are these numbers strong enough for you to say that this is perhaps a new lease of life SBI could look forward to for the remainder of the year actually?
See, in terms of profit and loss, maybe asset quality, I mean, it has been fairly decent. But one point where possibly market would see probably seek more clarity is the growth, because the advances growth has still not been really picking up in a big way. So I think that should pick up further valuations to catch up, because when you adjust for the existing net NPA, no doubt there has been improvement, but I certainly don't think that the stock is cheap anymore after this recent rally. So while structurally positive, but still will wait for one more quarter to more clarity to emerge before giving any recommendations on the stock.
I think the market is giving its verdict out, and I'll go with what the screen is telling me. Thanks very much, Siddharth, as well as Lalita, for joining in with your thoughts on SBI's earnings. Prima facie, yes, it's a loss figure, but if you look at the internals, the pure measure of asset quality is seen improving. I think the slippages is something that the market has taken on board, and they have recognized all of their MTM losses in this quarter. And we'll get more clarity on how that recognition has happened. But I think that just explains that above the bottom line, things have looked good operationally for the business. And I think whether it's this quarter or next quarter, that's the jury's still out on that, on how the market would view these numbers. But prima facie, they're giving it a verdict of it being thumbs up, because they think that the road ahead is seeming cleaner. Hindalco's numbers, great numbers. I mean, even if you look at the internals, and I think we should try and get more perspective on Hindalco's earnings. But as I look at the numbers in every possible way, those are good numbers on every parameter.
Yeah. Mayuresh, your reading, we're quickly moving from SBI to Hindalco actually. But Hindalco too, we were expecting an uptick of about 8%, EBITDA margins uptick of about 9%. Hindalco seems like a solid beat.
Afternoon, Ayesha. Yes, I think prima facie the numbers look very, very attractive, and I think the street was moving in with greater aluminium prices. So aluminium prices on the LME have actually moved up quite sharply. And even if you see the kind of rupee depreciation, I think the impact in terms of translation on their P&L was obviously going to be better than what one was expecting. So I think the EBITDA margins that they've probably posted, the plant shut down, I think the copper volumes are expected to go down. So I think the individual breakup, and though I don't have the press release in front of me, I think the aluminium business would do well. Copper business obviously would have struggled both in terms of volumes as well as the EBIT front. And what you're probably seeing in terms of even the alumina business, specifically in terms of the Utkal Alumina refinery, I think with alumina prices moving very, very sharply northwards, and what the NALCO management has also indicated in terms of spot prices remaining above the $500 mark, I think alumina, specifically in terms of Utkal reported numbers, should be again quite good. In terms of the transfer pricing that they probably do in terms of the consumption for aluminium from the Utkal mines, that would have probably had some amount of dent along with coke prices going up. But even an absolute number, in my opinion, on the EBITDA front for the aluminium business would be northwards if I look at the margins of 1,000 odd crores that one was really expecting.
You know, in fact, I'm going to take it across to Mubina. She would have more details beyond the PAT number on Hindalco. Mubina, just optically going by the first few flashes, it looks like a solid beat. What are the details that you're getting right now?
You know, it's important to look at Hindalco. One, of course, is standalone, and the other one standalone plus Utkal Alumina, because now, especially given the way Alumina has been the hero of the business for a lot of these aluminium companies, it's important to even consider the Utkal business of it. So you already do have, you know, the numbers from the P&L flashing on your screens. I just want to run you through the revenue from operations, including Utkal Alumina, and that's coming at 10,670 crore rupees, a decent 200 crore rupee uptick from the corresponding quarter, and that's been able to beat expectations. Even the aluminium EBITDA, again, including Utkal, has jumped up significantly to 1,530 crore rupees versus 1,132 crore rupees. So that as well is quite a beat really from the corresponding quarter, or rather from what we were expecting. Really, it's posting in a growth of almost about 35%, which is quite impressive. Copper is a bit sluggish, but you know, it's nothing that we did not expect. We knew that the copper business is going to be a bit tough, given the fact that there was that reduction of sorts in production that did come by. But aluminium certainly has done very well, with the revenues coming in at 5,667 crore rupees and the EBITDA jumping 35%. Better realizations, stable plant operations, and yeah, that is something that led to the metal production to come in at 323,000 tons. Again, a bit more than what the street was expecting, as all its plants operate at peak design capacities. Alumina production was a bit lower, but nevertheless, it's certainly the price realization that aided the alumina performance. So that's something that we would want to watch out for. Novelis, of course, we do know has delivered a stellar set of numbers. Highest ever quarterly adjusted EBITDA, the net profit as well jumped up significantly, and yeah, they've also given an update on the acquisition of Aleris Corp. But otherwise, the numbers do look good. In terms of the copper business, just a quick update over there. They do have their casting rod plant ramp up, which is completely on schedule. So I guess that should start showing some results. But yeah, overall production 81,000 tons versus 109,000 tons. So a bit of a dampener over there, and that's something that's caused the revenue from the copper segment as well to decline from 5,400 crores to 5,000 crore rupees. This is a planned maintenance shutdown, mind you, so it was expected. But nevertheless, all in all, the aluminium business is something that has caused Hindalco's numbers to power ahead.
Okay, Avinash Gaurakshekhar joins in to discuss the numbers. My only question with Hindalco is, you know, if you bring up the one-year chart of Hindalco, the 52-week chart, Avinash, you know, Hindalco's already staged a remarkable rally. And Novelis' numbers have been good. Their recent acquisition of Aleris also seems to be promising. Add all of that, is there a further trigger to the stock from 224 odd levels? Would you buy it today?
No, I think clearly I would believe that you know, the alumina prices continue to be quite firm, and as long as alumina continues to remain firm, you know, we saw very strong numbers from NALCO, and now Hindalco posting these numbers. I would believe that at least for the next 1 or 2 quarters, if alumina prices continue to be high, we could see a further kind of re-rating on the stock, because this is definitely come after a long time, and hopefully prices stabilizing, we could see margin expansion, happening at the operating level. And clearly, Novelis is also doing well. So on a consolidated basis, we could see a little bit of upgrading of earnings, for FY19, especially for the next 6 to 12 months. So although the stock has run up, I think we could see a moderate, say 10 to 12% further upside from these levels.
Avinash, is there merit in re-rating the stock from a level of 225 then?
I would be looking at levels of around 250 to 255, and probably at that time, there could be some amount of profit booking. I would say that, the risk reward is definitely not very attractive, from levels of 190 to 200, but clearly 250 to 260 could be very much be possible.
That indeed is the case, and I think even the internals in the breakup, things have looked very, very good for Hindalco. I think from all quarters, even their margin performance has been 12.5%. Was the expectation. That seems like a good show. But I'm also taken in by what SBI has reported on its margin. It's closer to 3% actually, this margin this time around on the margin side. 2.95% versus 2.67% quarter on quarter for SBI. So I know we are juggling two numbers, but both numbers have given positivity to the markets. Thanks very much, Avinash, for joining in. I think we have a quick question with Amit Dixit also on Hindalco's earnings. Simply put, Amit, looking at the numbers, would you re-rate Hindalco? Is there more scope of outperformance for the business here?
No, I would say, see, first of all, the numbers on all fronts, whether you look at copper, aluminium, and of course Utkal, are better than what most of the people expected, at least from my estimates. So, going ahead, what we see aluminium as better placed metal in non-ferrous domain. The reason being cost push, of course, and Hindalco, being an integrated player, is definitely poised to get advantage of that. Now, going ahead, see, these numbers are what I would say everybody more or less expected that numbers would be quite a blockbuster. But going ahead also, I see a lot of its strength in earnings. So, because alumina prices have not really come down, and at some point in time, you will definitely have an uptick in aluminium prices. Just because of cost push. So that's why I'm really quite optimistic on Hindalco that way. In fact, it is our top pick in non-ferrous space.
Okay. Amit, we just have time to get in a quick perspective, and thanks very much for telling us that Hindalco is a stock that you're still bullish on. Thanks very much for joining in for that quick reaction. We'll head into a break, commercial obligation. When we come back, focus on the market.